Welcome to the Commercial Real Estate Show, your source for market intelligence, forecasts, and success strategies. Hello, I'm Michael Bull. Thanks for being with us on one of the radio stations around the country, or maybe you're watching on YouTube, iTunes, or the show website, commercialrealestateshow.com. Wherever you are, thanks for being with us. Well, today we have a special show for you. We're going to talk about the lodging industry 2017. So we'll look at what's going on with the lodging industry, with the hotels, what's happened with RevPAR and performance and cap rates and things. We're also going to look ahead to 2017 to see what we might expect moving forward. Please welcome my guest. It's Mark Woodworth. He's Senior Managing Director. He's also Head of Lodging Research for CBRE Hotels. Thanks for being with us here in Studio
Michael,
1.
Thanks for having me. Before we get started, make sure you don't have any Russian ties in your background.
I do not.
That's been in the news a lot lately, so I thought I'd get that out of the way early.
Not that I can say on air.
There you go. Okay.
I'll have to ask the FBI if I have anything going on. So, first of all, Mark, appreciate you being here. I've had you on the show before many times and always enjoyed it. Love hearing you speak at events as well. And so what happened in 2016 and the hotel industry and lodging?
Well, a lot happened, and at the risk of sounding like Johnny One Note, because as you say, I've been fortunate to be with you a number of times over the years, but it was yet another good year. The typical hotel saw a lift in both occupancy and average daily rates, and therefore overall revenue per available room, or RevPAR. Yeah, it was a good year. It was not as great as we've seen back in 2015 and 14, but again, as we've reached really the peak of the cycle, that's what we would expect. So now operators have become much more focused on pushing prices whenever they can, as opposed to trying to sell more and more inventory, because again, given the seasonality of lodging, that as a practical matter, there's a limit to just how high can you get that occupancy level. And conceptually, we've been operating that now for a while, and we think we'll continue to stay there.
So it's not as good as 15, so that means that the numbers went down or the growth wasn't as strong?
The latter. The growth was not quite as strong. And again, I'm talking about from a top line perspective.
Right.
Yeah, the revenues and so forth.
Right. So is this across the board for all types of hotels, or were there some differences in performance?
There were some slight differences, but again, we're at that. We're in the very mature phase of the current cycle, and so virtually all property types, whether you think of luxury, upper upscale, all the way through economy hotels, have had a very, very good year. And in fact, the variation between each of them, it really hasn't been that great. The one category of hotel property type that has been growing noticeably more than the others are independents. Independent properties, which is a very broad category, because we're all familiar with the Hiltons and the Marriotts and the Hyatts and Starwood properties and so forth. But you have independent hotels ranging for us here in the Southeast. You have the Cloister, okay, and then you have Michael Bull's Motel up on Highway 41 North.
The Dewdrop Inn.
It's something like Dewdrop Inn, right? So it's a hodgepodge of property types, but as a group overall, one of the ways we think about it is they've been playing catch up. You know, they kind of lagged everybody else in terms of the strength of their recovery, and so again, that's typically what we would expect to see in this very mature point in the current cycle.
Okay, so if we're at the mature, what you seem to be saying is the top. What are the numbers for occupancy and RevPAR, and how does it compare to, say, historical numbers?
Okay. From an occupancy perspective, in 2015, according to STR, Smith Travel Research, domestic hotels achieved an all-time record high occupancy. And they've been tracking the data going back to the mid-1980s. The final year-end 2016 data is not yet available. What we're expecting to see is either occupancy being flat year over year, so i.e. we stayed at that record point, that record level, or it may even have gone up slightly.
And what is that number?
I got to refer to my notes there. It's just under 65.5%.
Okay.
So somewhere right in that range. The long run average, if we want to kind of view it that way, that's running at about 62%. So we're there's a big cushion now where the industry is overall relative to what you consider to be average behavior.
Okay. And what about RevPAR?
RevPAR, and to put this in perspective, If we go back to 2014, again, this is the national number, revenue per available room went up 8.2%. That was 2 years ago. In 2015, it went up 6.2. We're estimating last year it finished up at about 3.2, 3.3, somewhere in that range. And that number for this year, and we're getting ready to update all these data and so forth, and we'll I'm sure at some point talk a little bit about the election results and how that might show up in a change in our thinking as far as the industry going forward. But the number for this year currently is we're holding it right about 3.1.
I see. So that's still growth.
And I'm sorry, and to put that in perspective, the long run average RevPAR change is about 3.1.
Yeah.
So again, we've been going at a 2-3 multiple of the average for a while now, but now we're getting back to average.
So if the income growth has been kind of slowing, why is that? Is that from new supply or?
It's a combination of new supply, and there's no question the answer begins with that. We're seeing that the number of new hotel openings continues to accelerate. In 2017, we believe that the net change in available supply nationally is going to be right at the long run average of about 1.8, 1.9%. We've been lagging well below that for the last 6 or 7 years.
Okay.
So on the supply side, where the developers are finally figuring out a way to get their deals done, nationally we'll be back to the long run average. There's a handful of markets, New York, Houston, Pittsburgh, a broad array of markets that have seen a significant number of new hotels open up over the last 2 or 3 years, and by anyone's measure, you'd comfortably say they're oversupplied today.
Mm-hmm. So you mentioned developers figuring a way to get these deals done. What is financing like for the hotel industry today?
Still not easy. I think in relative terms, or if we think back some of the cycles you and I kind of grew up around and so forth, I suspect we're seeing in other property types, developers consider it to be relatively expensive. They can't borrow as much as they'd like, and what they can borrow, they're paying a little more for it and so forth. But I think it hasn't been long enough that lenders have kind of forgotten about the last cycle. So I think that, again, on the debt side, continue to be very, very cautious.
Mm-hmm. Okay.
To go back to the previous question, and this affects the development question as well, there is the sharing economy issue, or as most people are familiar with, the Airbnb. There's a lot of other players in that space, but they're most well known. Well, when we look about the supply of lodging options in a market, i.e. not just traditional hotel rooms, we're seeing some markets where that Airbnb or sharing economy inventory has grown and has been growing significantly. So that's just another factor that lenders, developers, investors overall have to get comfortable with. What does that really mean in terms of what should I expect my income to be in this market, in this property going forward, giving not just the new traditional hotel construction activity, but the fact that we've got all this other inventory that's in the market.
And that would seem like that inventory would be harder to track, right? How do you, if you're going to develop a hotel or buy a hotel, how do you look at that impact moving forward?
Well, you could go to our website and get a report, but
Okay.
I have perhaps a better answer than that, and that is we work very closely with a company called AirDNA, and they scrape Airbnb's website, and I believe they're getting ready to start doing other firms as well. So at least from a supply perspective, an investor can get a pretty good handle on what that inventory is. I mean, how much? What does it look like? I mean, is it sleeping on Michael Bull's couch? Is it a whole home unit with 2 or 3 bedrooms and no one else?
Well, that'd be
is
crowded
there?
because I'm usually on the couch. I'm usually
Okay. So probably really expensive to sleep on your couch.
That's right.
But so on the supply side, there's actually a wealth of information. I don't know much today, Michael, you want to get into this sharing economy thing, but one of the more interesting aspects of it from a hotelier's perspective is you build that 300-room Hilton, and it's probably going to be there 24/7, 365 days a year for the next 40 years. Mm-hmm. Okay. When we talk about the sharing economy and that extra room, that apartment, that condo, that home, It could be there all year. It could be there just for the
that
week.
could change.
The week that the Pope's showing up.
That could change.
So,
all right, well, I want to get into the future, your forecast. So stay with us. This is the Commercial Real Estate Show. Stay with us. We'll be right back. Hey there, thanks for checking out the Commercial Real Estate Show. Don't miss a video of special interest to you. Be sure to subscribe below. And if you appreciate the videos, be sure and thank our sponsors. There's a link to more information about them in the description. For more videos, podcasts, and articles, check out creshow.com.